we have discussed that in accounting we have a double entry bookkeeping system. What is double entry bookkeeping system? That every financial transaction has dual effect. One is debit and one is
Credit.
credit. So what we need to do over here, we need to see that debit should always be equals to credit. We have assets and we have liabilities, right? What are
Yes, miss.
assets? Assets are
Miss,
the
the resource
the resources owned by the business are the assets,
assets.
right? And we have two types of assets. One is current asset and non-current asset. Current assets have life of less than 1 year, and non-current assets have life of more than 1 year. So
Okay,
assets
miss.
that have are used for long term, such as machinery. When you buy a machine, it has life of more than 1 year. That is, you can use that machine or you can produce units from that machine for more than a year. So you will say that this is a non-current assets. Okay, like
Yes,
land,
miss.
building, property. All these are under the category of non-current assets. Factories, office building, warehouse, delivery van. Current assets are those assets that are short term assets and can be used within a year. It can be receivables. I'll tell you what are receivables: bank, cash, and inventory. Do you know what is inventory?
Yes, miss.
Those goods that are bought for resale purpose and are
Resale
kept in
purpose.
and are
Yes,
kept
miss.
in the warehouse.
As a
Now-
stock. Miss, right, miss?
Yeah, it's a stock. Then we have receivables. Account receivable is also a current asset because they are basically our credit customers from whom we have to receive the money. Receivable means you need to receive the money. You sold goods on credit and now they are going to pay you. You have to receive money from them. So they are
Okay.
basically your account
Receivables.
receivables. And they are also your current assets.
It's
Now we have, I want you to read the definitions, please.
some assets are held and used in operations for a long time. An office building can be occupied by administrative staff for years. Similarly, a machine has a productive life of many years before it wears out. These are usually referred to as non-current assets.
Yeah, that have life of more than 1 year or are also called as long-term assets. Current assets are short-term. For short term, they can be used within a year. Those are current assets. Now we
Okay,
have
miss.
liabilities. Liability is basically an obligation that if you have taken loan from the bank, you need to pay that amount. Okay, so for you, it's a liability on you that you have to make the payment.
Payment. Yes,
Now
miss.
there are three types of them. More than there are two types of liabilities. One is non-current, and second one is current liability. Like bank loan, you are liable to pay back the amount of loan to the bank. Payables. What are payables? They are basically your suppliers from whom you have taken the money, taken the goods on credit, and you need to make the payment to them. Account receivable, the word itself tells you that you have to receive. Account payable is basically that you have to pay. So you
Miss,
will
it's a
say,
vice versa to account receivable.
yeah, exactly. This is your supplier.
Yes, miss, suppliers. Okay, I got it.
It's a credit supplier from whom you have bought the goods on credit. Now, then tax is also a liability. You need to pay the tax to the government. You are liable to pay the tax to the government. That's also your liability.
Yeah. Okay.
Now, accounting equation. Remember this thing that assets, this is an accounting equation on which whole accounting is based. Assets equal capital plus liabilities. You need to remember this equation.
Okay, miss.
Now, assets are always equals to capital plus Liabilities. What does that mean? We are going to see. You know what are assets? Let's discuss
Yes.
capital as well. Capital is basically the investment that you are doing in the business. For example, if I have my own car and I have given it to the business, that's the capital. That amount, it can be the form of asset as well. It can be the form of cash as well. I have given 1 lakh about to start up a business. That's my capital. So any investment that you are doing in the business
Investment.
is
Capital.
is your capital. Exactly. Now what you need to do, you need okay, we have a scenario over here. On 1st July, Neelam Sultan decides to open up a flower stall in the market to sell flowers. She has $2,500 to put into her business. So she's investing 2,500. So for her, this is her capital,
Capital.
right? Now,
Yes.
when you are investing into the business, what's your motive? That you have to earn
Make
profit.
profit.
Yeah, you have to earn profit and return. So when you invest into the business, the return on your investment is basically your profit. The business owes the capital and profit to the proprietor. So you are investing into the business, you are going to have the profit in return.
Return. Yes.
Now, asset equals capital plus liability. See, on one side, if you see on one side, you have invested. So the capital will increase into the business, right? Capital will
Yes.
increase in the business of 2,500. And on
Yes.
the other hand, you have invested in form of cash. So asset is also cash is also your asset. So asset will also increase.
Hmm. Okay, miss.
Okay, on one side you are investing in form of cash, so asset will increase, and on the other side capital will also increase. In this way, your equation will be equal. Now,
Okay.
Neelam Sultan purchased a market stall from Sanjay for 1,800. She bought a stall. Now she has 2,500 cash. How she's using this uh, cash? She's buying a stall of 1,800. Okay, she's buying flowers and plants of 650. Add how much cash is left at the end? 50.
50.
Okay. Okay, 50 is the cash that is left with her in the business. So in this way, asset and capital will be equal and liability will be zero. Okay.
Okay, miss.
Now,
Miss,
yeah.
uh, are these the double entry systems that you are telling me?
No, no, these are not double entries. We are just starting from scratch. These are basically the effect on each of them on the accounting equation. Like what will be the effect on asset if you buy something? What will be the effect on this equation if you invest into the business? This is just an equation. Double entries we'll study chapter 4, chapter 3.
Okay.
Okay. This is just like they are telling you how you have to use this equation to find the missing value, to have the
Okay.
concept
Okay.
of assets, capital, liabilities. Now you know that sales minus cost is equals to profit.
Yes, miss.
Sales minus cost equals profit. You have made sales of 900. That means you have received $900 from the customer and you paid 650 when you bought them. So 250 is the profit. Okay, I want you to read this example. First, read the example that we'll discuss the solution.
On 3rd July, Neelam has a very successful day. She sells all of her flowers and plants for $900 cash. Since Neelam has sold goods costing $650 to earn revenue of $900, we can say that she has earned a profit of 900 minus 650 is equals to 250 on the day's trading. How do we reflect this in the counting equation? Solution? Should I read the solution as well?
Okay, first tell me this question is clear to you.
Yes, miss.
Okay, she have sold the goods of 500. The cost on which she bought the goods were 650. So basically, 250 is the profit that she have earned. This is the profit that will increase the capital amount. Okay, this will
You
increase the
okay?
capital. Now, how it will increase the capital? See, stall 1,800. You sold flowers and plants for 900, right?
Hmm.
So now flowers and plants will be zero. Asset will be zero. Flowers and plants, you have sold them. So now you are left with nothing. So the flowers and plants in the business will be zero, right?
Hmm.
And we sold them for 900. So 50 was the cash that we were already having. We have received 900 from the customer. This is a customer, Mr. A. This is the business. So customer business gave 5 flowers and stall. Now business do not have any flowers. Flowers and plants. Business have given flowers and plants to Mr. A. Okay, for 900, and Mr. A paid 900 in return. So in the business, cash balance will increase by 900, right?
Yes. Yes.
So 900 is being added in the cash amount. And on the other hand, we have profit. We have earned profit of 900 minus 650, that is 250. This profit is to be added in the capital. This is the retained profit, the profit left with the business at the end, the owner at the end.
Okay,
Okay.
miss.
You just need to remember this equation. This example won't be obviously asked in the exam, but you need to remember the formulas that are written over here.
Like asset is equals to capital plus liabilities.
In
This
the cap,
formula.
yeah, and this one as well. In capital, you will add the retained profit plus
Okay,
liability.
miss.
This
I
will
got
be
it.
us. Now, what are net assets? Another name of capital is net assets. Okay, because
Okay.
if you know asset minus asset is equals to capital plus liability. If I need to find the capital, I'll do assets minus liability equals capital. So
Okay.
this is total assets, non-current plus current. This is total liabilities. So whenever in the exam you find this net asset part, remember this thing, that's your capital.
Capital.
Now, okay, see they have just I'll tell you this thing from the another equation. Okay, that how you have to calculate the decrease or increase in net assets. Otherwise, you'll get confused. We'll
Okay.
discuss it. Drawings, any amount withdrawal by the owner from the business. That is basically your
Drawings.
drawings, right? So in
Yes.
drawings is basically the amount or the goods you have taken for the personal use. Read this example.
Since Neelam Sultan has made a profit of $250 for her first day's work, she feels justified in drawing some of the profits out of the business for living expenses. Neelam decided to pay herself $180 in what she thinks of as wages as a fair reward for her day's work. Okay, miss.
Yeah,
She bought $180 for her personal use from 250, which was the profit that she made from her business.
okay. So basically, see, profit earned in the business is 250. She took 180 from the profit, right?
Hmm.
So the remaining profit retained in the business is,
70.
yeah, 70 is basically the amount of drawings. One thing you just need to remember, profit will increase your capital amount and drawings will decrease your capital. Okay,
Okay. Okay.
so this is the equation that you will get: asset equals capital introduced plus earned profit minus drawings plus liabilities. Okay, this is the
Miss, what is
formula.
this formula for? What is this formula for?
See, this all these equations that I'm telling you, how this will be asked in the exam. They can ask you that these values are given to you, the scenario is given, and you need to calculate liability. Any one thing will be missing from this equation. So you need to drive that equation to find the missing value. Like in the exam, they can ask you calculate the capital introduced in this above scenario. So you will
Hmm.
use this equation to find the capital introduced.
Miss, but the formula for capital is equals to assets minus liabilities, right, miss? So she
Yeah,
can simply
you.
calculate.
Okay, I just gave you the example that if, for example, see, if they have asked you in the exam that find the value of assets, for example, okay, and
Hmm.
capital introduced is 5,000, the profit is given 300, drawings are 150, liabilities are given 100. So you will put the values in the equation, you'll substitute the values in the equation, and you'll find the missing value. In
Okay,
this,
miss. Only if the profit and drawings are given, then we have to use this formula. Otherwise, the simpler formula would work easily.
yeah, exactly. You will come to know with with the question that which formula you need to use. But you should be
Okay.
familiar with these three. Okay?
Okay, miss. I'll write it down. Okay, miss.
You're writing right now?
No, no, miss. I'll write it down later.
Okay. Now, see, remember this thing that if asset increase, capital also increases. Okay. See, you just need to know that you know what is the difference between asset, liability, and capital. You need to see that whether liability is increasing or asset is increasing, whether capital is increasing in the business or asset is increasing or decreasing. How you'll know that? See, this is a question. Now, you know that asset is equals to capital plus liability. This is the basic equation. I want you to tell me for the first one, if you're taking loan of 5,000 from its bank, so what will be the effect, and it will be affecting asset, liability, or capital.
Miss liability.
Okay, liability will increase or decrease?
Miss it will increase.
It will increase. And what will be the effect on asset? See, they all is equals to capital plus liability. So liability will increase. What will be the effect on asset or capital? No effect on capital. And what about asset?
Mm, miss capital would also increase
Okay.
because it's been added in the amount of liability. And
No, asset will also increase. You will receive the cash, so asset increases, and on the other side, liability will increase.
okay.
Okay, you are receiving cash, so asset will increase, and on the other side, liability will increase. Got it?
Oh yes, I got it now. Okay, miss.
Okay, B.
A business pays $800 cash to purchase. Miss, a business paying $800 cash to purchase goods for resale. So, miss, asset would increase because they are purchasing the good in
Yeah,
return of cash. So, asset would increase, and on the other hand, capital would also increase because no, miss, I think capital would not increase. Uh, Only asset
yeah. See, asset
and
will increase, and on the other side, asset will decrease. Why? See, it can affect only only one thing as well. On one side, you are receiving inventory, so inventory will increase. This is your asset, right? On the other hand, you
yes.
are paying cash, so cash will decrease. So
Okay, yes.
this won't have any effect. This will be cancelled out basically. One is positive and the other one is negative. So asset will be affected only. It's not necessary that only if asset is increasing or decreasing, capital liability should be affected. It can affect asset as well. Okay.
Okay.
The proprietor of a business removed 50 from the till to buy her husband a birthday present. What do you think?
So, what of a business? Miss, what's a till?
Okay, it's basically you can just assume that it's a kind of box in which some amount of money is kept of the business for daily basis expenses, for daily
Okay.
expenditures, like to pay the milkman, to pay the cleaning staff. That's the till. But it's the
Oh,
business money of the business only.
okay. Miss, cash in hand would increase, like miss, because she's removing from the $50 from the till. So like she will get $50, and then asset capital would decrease and asset would increase.
Capital would decrease and asset will.
Wait, miss. Asset would also decrease because we're talking about the business in this scenario. So, miss, both will decrease, I think. Asset as well as capital because like she's like withdrawing some amount and at the same time the asset is also decreasing and because this amount is already been added into the business, so capital would also decrease. I think so.
Asset is decreasing and this is drawings basically. So drawings will also decrease your capital. So asset will decrease and capital will also decrease. You are right, but you will say that this
Okay,
is
miss.
drawing because you know drawings
Okay.
are subtracted from capital. Okay, D.
A business sells good costing $300 at a point for profit of $140. Business got a sale of $300 at a profit of 140. So miss, revenue would increase and as well as capital.
Capital will increase. Revenue basically means that it's asset. So asset will increase by 300, right?
Yes.
Capital will increase by 140. Okay. But
Hmm.
one more thing. Asset on one side will increase by 300, but this is the cost. You have sold at a profit of 140. So you might have received 300 plus 140. You might have received 440 for it, right? The goods
Okay.
cost was 300. You have earned profit of 140. So in total, you receive 440 from the customer. So
They have
asset will
separated cost and profit.
profit. Yeah,
Okay, miss.
exactly. So 440, the asset will increase by 440. A business repays
Okay.
a 5,000 bank loan plus interest of 270.
Hmm.
Interest is expense, and expense, you know, it will affect the profit and capital indirectly.
Okay, okay. Miss, because it's repaying, so liability would decrease and
Yeah.
interest if $270. They are paying both bank loan and interest at the same time.
Yes, exactly. So interest is an expense.
Yes, yes, miss. And bank loan is a also an expense. It's liability. So yes, miss. Uh, both are, I guess, both would decrease because liability would decrease and expense would also decrease.
See, on one side, asset will decrease by 52570. By why 5270? Because 5,000 is the loan amount you are repaying, plus you are paying 270 as the interest. So in total, you will pay 5270. So on one side, your asset, the cash will decrease, okay, and on the other side, liability will decrease by 5,000.
Okay,
If you see interest is expense, so if an expense will increase, the profit will decrease, and in short, the capital will also decrease. Okay.
okay. Miss, are these type of questions asked in the exams?
Yeah, obviously, this type of questions are only asked.
Okay, okay, miss.
Like, but see, it depends. Like, they can give you the double entries as well. The basic concept you should have, like, what are asset, what are capital, what is liability. If you know this thing, you can easily, you will be easily able to do the question. Okay.
Okay, miss. Okay.
Account payable and receivable. I told you that we have two types of accounts, and these accounts are only made or only opened on credit transactions only. Because if you are doing cash transactions, you won't need to receive the money from the customer. Okay. Account receivable or account payable. Account payable is basically our supplier from whom we have purchased the goods on credit and we need to pay him. There's a certain time period given, either of 30 days, 2 months, or 3 months, in which you need to make the payment to the supplier. So the supplier is your account, trade account payable.
Okay.
And it's a current liability on you. It's a liability on the business because supplier won't give you time of more than a year to pay the payment.
Okay, miss.
Account receivable is basically account receivable is a current asset, and trade account receivable is a current asset, and you have to receive the money from the customer. This is a credit customer. Account receivable is a credit customer to whom you have sold the goods on credit and you need to receive the money from them. Okay,
Okay,
this is a current asset. Okay, I want you to just go through this table once.
okay, miss.
Now, okay, double entry bookkeeping. You might have this concept. Just read it. Read this part only.
First line.
Yeah, the first part. Just bullet points as well.
Okay,
Then I'll tell you.
okay, okay, miss. Double entry bookkeeping requires that every transaction has two accounting entries, a debit and a credit. The rules of debit credit state that every financial transactions give rise to two accounting entries, one a debit and the other a credit. It is vital that you understand this principle. A debit is one of the following: an increase in an asset, an increase in expense, an increase or increase in a liability. A credit is one of the following: an increase in a liability, an increase in income, a decrease in an asset.
Okay. Now you know this mnemonic. We might have discussed it. I don't exactly remember. I have discussed it with you or not. CLEAR. C stands for capital. L stands for liability. E stands for expenses. A stands for asset. R stands for revenue. Okay. So whenever asset expense it will always increase on the debit side. Whenever liability income capital increase, this will increase on the
Credit
credit
side.
side. Whenever asset expense decrease, it will decrease on the credit, and liability income capital decrease on the debit side.
Debit. Okay, miss.
This thing you need to, if you want to note it down, you can quickly note it.
Which I have already noted down from the lecture of Miss Isha. She also told me the same thing.
Okay, okay. Now we have double entry bookkeeping system. Debit is always equals to credit.
Credit.
Okay, total value of debit is always equals to credit. Now we have to make the accounts after we make the double entries. This is the credit side, this is the debit side.
Debit.
Okay, now what we do, this sorry, this debit side should always be equals to credit side. Now we need to see the double entries. If you do cash sales, you know what's the entry for cash sales?
Yes, miss.
What it
Cash debit, sales credit.
good. Cash debit, sales credit. Then we have account. Okay. Credit sales. What's the entry for credit sales? Account receivable debit and sales credit.
Sales credit.
If it's a credit purchases, the entry is purchases debit, account payable, credit.
Credit.
And when it's cash purchases, so purchases debit, cash, credit. Now, I'll tell you how you post the transactions into the double entry. How you post the double entry into the T account. See, what's the entry for cash sale? Cash debit by $2 and sales credit by $2, right? You'll make a cash account. This credit, this is debit. This is credit, this is debit. Right hand side is the credit side, left hand side is the debit
Debit
side.
side.
Now, if you see cash is being received, so cash account is to be debit $2. Okay, because of sales. Then
Hmm.
sales account is credit because of cash account. So you will write the name of the corresponding account in the T account. That which account is
Okay,
being
miss.
opened. Then payment of a rent bill. You know rent is an expense. So the entry is
Yes.
rent expense debit, cash, credit by 150. So you will open up a cash account and rent account. Cash you are paying, so it will be on the credit side. Rent is an expense, so it will be on the debit side.
Debit side.
Then cash purchases, purchases account debit because of cash, cash account credit because of purchases. Now remember one thing that if you are having any non-current asset in the account, so you will open up the account with the name of the non-current asset. Like if it's office equipment, if it's furniture, so you will open the account with the name of that particular non-current asset.
Okay.
Now, this question you'll try work, okay? It's on page 39.
Okay.
You can note it down.
Okay, miss.
Now, go through this table. You know these entries, but still just go through it.
Okay. Miss, can you explain me the third one? Net effect is equals to cash transaction.
Okay, it's basically that when customer pays you in return, like first you sold goods on credit, you made the entry account receivable debit, sales credit, right? When you have
Hmm.
received the payment, so what entry you will make? Cash account will be debit because you are receiving cash, and this
Hmm.
receivable will decrease. Asset will decrease on the credit side, so you will make the entry account receivable credit by the amount. When customer
Okay.
pays you, okay, when you receive the payment, payment is received. In the same way, for pay purchases, you will do at the end when you make the payment. So you will do account payables debit because your liability will decrease and cash credit simply.
Okay, miss.
How? Okay, then they have just given account same thing. Mhm. Okay, let's discuss this capital revenue. Then, okay, this question you can try on your own as an homework. Okay,
Okay,
you will be able to do it. I have told you the rent is expense, insurance premium is also an expense. Okay, insurance as
okay,
an
miss. Page
expense.
number.
It's page 43.
Okay,
Now we have two types of expenditures. One is capital, second one is
revenue.
revenue expenditure. Now, what is capital expenditures? Capital and revenue expenditure. There are two types of items. One is capital item and the second one is revenue items. See, for example, you have bought a machine. Okay, from the supplier. This is a supplier. You have bought a machine, and this is your factory. So the list, the original price of the machine is 50,000 or 5 lakh. So
Okay,
any expenditure, capital expenditure is basically any expense incurred to buy the machine, to acquire the asset, or up, or upgrading the capacity of non-current asset. This is the definition of it. It's written in the book. I'll show you. Acquisition of an asset, when you're buying any asset or when you're improving the earning capacity of the asset. Now, for example, if I say that you have a machine that makes 10,000 units. Now you have installed, now you have upgraded this machine, and in per day, this machine is making 20,000 units per day. So the expense that is incurred in upgrading that particular machine is a capital expenditure.
yes. Okay, miss.
If you're buying any non-current asset, that's also your capital expenditure. Now, remember this thing that capital expenditure is not only the price of the machine on which you have bought the asset. It is the total cost incurred in buying the machine till uh, you have bought the machine, before installation, before using that machine into the factory. Whatever is expenses incurred in between that time period, that is your capital expenditure, or that will be the part of the asset. You will remember this thing that capital expenditure, all expense incurred is capitalized in the cost of an asset. Is to be capitalized. Capitalized means that you will add all those expenses incurred in bringing the machine to the factory is to be added in the cost of an asset.
Okay,
I'll tell you how. See, for example, you bought the machine. What are the other expenses that might be incurred before you have installed the machine and started using it?
transportation cost.
Good. Delivery cost, transportation cost, you can say. Import duties,
Yes, yes.
and if
Insurance.
what else?
Insurance.
No, insurance will be a revenue expenditure.
Okay.
Import duties and professional fees. The person who is coming to install the machine, he's going to take some charges,
Yes, yes,
installation charges, right?
yes.
And there are many, like, yeah, I think in your course, you only have this one. Legal fees is also one of it. If you are buying a property, so you might need to pay a legal fees. So the final value that you are getting, for example, it's 30 lakh. So this 30 lakh is to be recorded in the statement of financial position as a cost of an asset. You won't write this 5 lakh. You will write the total amount, total expense incurred in bringing the machine to the factory. Once you start using it, then all the expenses incurred after that is revenue expenditure.
Okay.
Now, capital expenditure I told you it's to be recorded as a cost of a non-current asset. Revenue expenditure. Revenue expenditure is basically day-to-day expenses of the business, or you can say expenses incurred to maintain the earning capacity of a non-current asset. For example, once you have installed them, there might be some maintenance charges, right? Maintenance required. Then the salaries or the wages of employees who are operating the machine. It can be lubricant or oil that you need for the machine. So expenses that are incurred once you have started using the machine is a part of revenue
Revenue.
expenditure, and that will be treated as an expense in the income statement or profit or loss statement.
Miss, capital expenditure is also like uh, the expenditure that increases the life of a machinery of a non-current asset. Like Miss.
See, increases the life if you are upgrading it. You can say if you are upgrading it, so life of the machine will increase. But capital expenditure is like all the capital expenditure that is incurred, it will be added in the cost of an asset because that is related to that specific asset. So that's why we are adding all the delivery cost, transportation, custom duties, and professional fees in that particular cost of an asset.
Okay.
Now, revenue expenditure is an expense, right? It will be shown in the profit or loss statement. Capital expenditure is to be recorded in the cost of an asset. Now, if for example there is an expense, revenue expenditure, right? This is an expense. You have treated it as capital expenditure. In the exam, they will ask you what will be the effect on asset and what will be the effect on profit. If this is an expense, you have added it in the cost of an asset. Capital expenditure means you have added it in cost of an asset. So what will happen if you have added expenses in the cost of an asset? The expenses will decrease.
Miss, I didn't get it. Like,
See, there was a revenue expenditure. For example, there was a maintenance charges. You have added that in the cost of an asset. Okay, that was
okay.
a day-to-day expense. You have treated it as a cost of an asset. You have treated it as capital expenditure. So expenses will decrease, right? So what will be the
Yes.
effect on profit? It will increase. So you will say that profit will be overstated, right? For example, the amount of expense that you had was 5,000. You have added it in the cost. What will be the effect on assets value? It will also increase by 5,000. So it will also be overstated.
Like Miss, we as if we add a revenue expenditure in our capital expenditure. So then what would happen to our asset and profit?
Yeah,
So this
exactly.
is
What will be the effect of that error on the profit, on the value of profit and assets? This is
okay.
an error made, and you need to tell that what will be the effect of this error.
So Miss, will it have a positive effect or adverse side effect?
It will have an adverse effect. See, the profit will be overstated, and asset will also be overstated. So they will only ask you that what will be the effect. That's it. They won't ask you to
Yes.
correct it somehow. This will be a theory question basically. And if it's vice versa, that there was a cost of an asset 5 lakh, but you have written it as an expense in the profit or loss statement. So what will happen? Simply, this was a cost. You have written it as an expense. So asset will be low. The amount of asset will be low. That will be understated. And the revenue and later you have it as revenue. So expenses will increase and profit will also be understated. Because obviously expense increase and profit will become low. If expense
Yes.
increase, profit will be low. So these two things you need to remember. You can note it down somewhere. This will
Okay.
like asked in most of the questions kit you will find of this kind of error that has been done.
I've taken a screenshot of it.
Okay. Now we have, okay, this is a perfect question that, okay, I want you to try it. Okay, one more thing before this. There's a capital income and there's revenue income. Capital income is basically income generated after selling a non-current asset. When you sell a non-current asset, the income that you are generating is basically your capital income. And revenue income is the income that you are making from trading operations. Income on daily basis, like you earned revenue by the credit. If somebody paid you, bought goods from you, and you have earned 50,000 cash, that's a revenue income. On daily basis trading, the income that you are making, that is basically your revenue income. Capital income is specifically the sale of non-current asset, that you have sold a
Okay.
machine. So the income that you are having, that's capital income. And on daily basis, you are getting, you are generating income on from your trading operations. That's revenue income.
Okay.
Okay. Now this is a question I want you to please name one by one. Start from A.
Purchase of premises.
Yeah.
Purchase of premises means miss capital expenditure, right?
A premises is
Premises
basically building.
building. Yes, miss. It's a non-current asset.
Yeah, it's a capital expenditure, right? Then
Solicitors fees in connection with the purchase of premises. Miss, who are solicitors?
like you, if you buy a building, if you buy a property, so you need to pay a commission to the agent. Solicitor is basically the agent that is, like, that is in between the two parties. The agent that you have, state agent we call over here. So the state agent, the commission that you are paying to the state agent is basically the legal fees that you have. So this is
Okay.
also a capital expenditure.
Yes, miss, capital expenditure. Okay, miss, I got it. Yes.
Now
Okay.
then,
Cost of adding extra storage capacity to a mainframe computer used by the business. Miss, this is revenue.
this is capital. For example, if you have the ground floor and now your business is expanding, you have to buy the first floor as well. So you are like improving the earning capacity. That's why. If you
Okay.
buy a asset or if you improve the earning capacity of an asset, so that's a capital.
Okay, miss. Okay, I got it. Computer repair and maintenance costs. Miss, this would be a revenue expenditure.
Right.
Profit on the sale of an office building. Capital expenditure, Miss E.
Capital income.
Capital income, sorry, Miss. Yes, yes. Capital income. Revenue from sales by credit card.
This is a part of your
It's
trading
revenue.
operation. Yeah, it's revenue income.
Revenue income.
Yeah. Then
Cost of new machinery. Miss capital expenditure.
Yeah.
Customs duty charged on machinery when imported into the country. Miss capital expenditure.
Yeah, it's capital expenditure.
Carriage cost of transportation in transporting the new machinery from a supplier's factory to the premises of the business, purchasing the machinery. Miss capital expenditure.
Yeah, you're transporting is capital expenditure. Cost of installing,
Miss capital expenditure.
okay, wages of machine operators.
Wages of machine operators. Miss revenue
Yeah,
expenditure.
exactly. The most common example of this can be seen if you have bought a bike, if you have purchased a bike, okay, all the expenses incurred in bringing a bike to your house or to your location, that's capital expenditure. Once you started using that bike, that will be your revenue. From that day, your revenue expenditure will start. Like the fuel that you have, the maintenance, the repair costs, all of the expenses incurred after that time period will be your revenue expenditure. Okay.
Okay.
Now this chapter is completed. Okay, what you have to do, we are done with two chapters. Now we have chapter 3 is bit lengthy. So chapter 3 and 4 we'll be starting with in the next class. What's your task for today? You have to read the chapter and you have to solve the kit of both chapter 1 and 2. I've shared the kit with you. If you don't have the hard copy, you can just solve from the soft copy as well.
Okay,
Okay?
miss.
So for now, I'm keeping it till here. Then in the next class, we will start with chapter 3 if you won't be having any issue with the first two chapters.
Okay, miss.
Do you have any question?
Miss, not right now, but if I have any, I'll tell you by the day after tomorrow. Inshallah, in the next class.
Okay, sure. Okay, then see you in the next class. Allah Hafiz.
Allah Hafiz.